Okay, dear children, for your examination, there will be questions from adjustments. So today I'm going to teach you 4 adjustments. What are these 4 adjustments? Accrued expenses, income receivables, depreciation, and bad debts. So let's move to the first one, dear children, accrued expense. Here you can see not just expense, accrued expense. Accrued expense means from the total expense, certain amount has not paid. So accrued part means the payable amount, the yet to pay amount of the expense. So directly I'm teaching you the accounting treatment for the accrued expenses, dear children. So in the trial balance here, you can see electricity as 9,000. In the trial balance, you can see electricity as 9,000. So what is this 9,000? This is not the accrued amount. This is the paid amount. Why, my dear? When making a payment, cash credit and electricity already debited. After crediting to cash, the paid amount after crediting to cash recognized as an expense, that's electricity. So this 9,000 is a paid amount. But when we talk about adjustments, under the additional information, you can clearly see accrued amount of electricity. So here, this is the paid amount, this is the accrued amount, right? So however, according to your according to O-level syllabus, we need to prepare 2 financial statements. These are statement of profit or loss and statement of financial position. So how do we calculate profit or loss? Profit or loss we calculate on accrual basis. In simple terms, accrual means the total income should recognize here, total expense also should recognize when calculating profit. Okay, dear children, then in the trial balance I told you, you can see the paid amount. Under the additional information, you can see the accrued amount, right? So let's directly talk about the adjustment for the accrued expense. When we recognize the total electricity bill, here you can see in the trial balance 9,000, okay, but under additional information you can see an accrued amount of 1,000, dear children, an accrued amount of 1,000. So tell me, how do we calculate profit? On accrual basis. So here we need to extract whether paid or not the total expense. We need to extract the total expense whether paid or not. So 9,000 paid, this 1,000 also we need to recognize as an expense. We need to recognize as an expense. So here I will add 1,000 to the paid amount. Then the total expense, I can clearly calculate the total expense. Right now it is 10,000. 10,000. So in the P&L, always you need to record the total expense relevant for the period. And my dear children, the next thing is, out of this total, how much has paid? Paid only 9,000. So this same 1,000 we need to consider as a payable amount, as a liability. Why, my dear? Because of the total, so sorry, out of the total expense 10,000, 9,000 has paid in cash. You know how much is yet to pay amount? How much is the payable amount to be paid? It is 1,000. So you need to consider this 1,000 as an expense as well as a liability. So what kind of liability is this? This is, my dear children, a liability which expect to settle within next period of 12 months. So such liabilities are, we call such liabilities as current liabilities. So you need to consider this 1,000 as an expense. So total expense is then 10,000. Out of 10,000, 9,000 has paid, 1,000 is accrued. So same 1,000 you need to consider as, dear children, a liability in the SOFP. So this is how we record, my dear children, double entry for accrued expenses. So what's the double entry? Expense account debit, accrued expense account credit. Expense account debit, liability account credit, right? So now you can try another one, dear children. However, this is how we record the impact of accrued expenses in the P&L. So however, these adjustments we need to record in 2 places. I considered this 1,000 as an expense as well as a liability. So when you record the total expense, the paid amount plus the accrued amount, the total, right? So I think this is clear for all of you. Darwane, now let's go for this activity. Here in the trial balance, you can see salary as 25,000. Under additional information, you can see an accrued amount. So what is this? This is a paid amount. What's this? This is a yet to pay salary payables. So now quickly try to complete, my dear children, extracts of profit or loss statement and the statement of financial position. Give it a try. Okay, right. Now I'm going to show you the answer, dear children. So when recognizing salary expense relevant for the period, we need to recognize the total. So you can see in the trial balance 25,000 as a paid amount. When preparing the P&L, you don't have to mention 25,000 plus 5,000. Don't do it. Directly mention other relevant amount, right? So the paid amount is 25, accrued salary is 5. That is also part of the salary expense of the same year. So total salary is then 30,000. 30,000 is a total salary expense. Income should match with the expense relevant for the period. When recognizing income and expenses, need to recognize the totals. And out of the 30,000, 25 has paid, 5,000 is yet to pay amount. You know payables as liabilities. And accrued salary is only 5,000. So dear children, first of all, when doing this question, you need to prepare both structures, right? Both structures. Then start from additional information like this. Start from accrued salary. You can see, find out the salary mentioned in the trial balance. So come on, add this accrued amount also to the salary amount. Then find out the total expense, whether paid or not. Record it in the P&L. Now compare, out of total 25 has paid, then 5 is a liability. Then I'm going to teach you another one from accrued expenses. So this is also very important. So here in the trial balance, you can see bank loan 10%. So first of all, you need to record this bank loan as a non-current liability. So this bank loan is a non-current liability. You need to record it in the SOFP under non-current liability. You all know that. Bank loan we expect to settle during number of accounting periods. So this amount you need to record under non-current liability. That is the first thing. Right now I'm going to teach you about the accrued adjustment with related to the bank loan. So I told you, dear children, when you can see a percentage, always, come on, no one provides us loan freely, right? So here we borrowed 200,000 bank loan. We can see an outstanding amount of 200,000 and we borrowed it under the rate of 10%. Annual interest percentage is 10%. You can easily calculate now whether paid or not the total interest expense, that is 10% from the bank loan amount. 10% from the bank loan amount. So how much is the 10%? It is 20,000. So whether paid or not, you know it as a financial expense. So you can mention it in the P&L as interest on bank loan, no directly interest expense. So 20,000 is a total expense. Always in the P&L, you need to record the total expense. Don't record the amount given in the trial balance. What is this? You know this as a paid amount. This is only the paid amount. But you know, after multiplying from the percentage, you calculate the total interest expense as 20,000. Total interest expense as 20,000. Always you need to record the total expense, dear children, right? Now, if you want to identify the accrued amount, dear children, compare the total expense with the paid amount of interest expense. So, dear children, you can see the paid interest as only 4,000. So, how much is the payable amount? Payable amount is total expense is 20,000, but during the period paid only 4,000 as interest expense. And clearly, I can recognize, dear children, I can recognize an accrued interest as a current liability. No, it is a current liability. Accrued interest as 16,000. Nogevu polier daseda. Let's see the steps. First of all, when you notice bank loan, you have to record it under non-current liabilities. That is number one. Then from the after multiplying from the percentage, you can calculate the total interest. Then that total interest you need to record under financial expense, because expenses we need to record as totals when calculating profit. Then you have to compare this total amount with the given amount in the trial balance. So you can see the paid interest as only 4,000. Then you can identify the accrued amount as 16,000. So sometimes you can't see, dear children, any amount as interest. You can see only 10% bank loan. So now you have to record bank loan as a non-current liability. Then you need to calculate the interest, whether paid or not. Total interest is 20,000. Can you see any paid amount? Can you see any paid amount? Can you see any paid amount, dear children? No, right? in on the total accrued amount also, the total expense has not paid in a total accrued amount also 20,000. I think now this is crystal clear for all of you, right? Okay. Right, okay, Darwane, the second adjustment, that is income receivables. Pute, income means income, but now you can see with income as receivables. So income receivable means out of the total income relevant for the period, a certain amount has not received. So this is the amount which has not received. This is the income which has not received out of the total income relevant for the period. So let's go for the accounting treatments. So in the trial balance, you can see rent income. What is this rent income, dear children? Only the rent income received in cash. So why I'm saying like that? When receiving cash, we already recorded a double entry for the received amount. Like how? Cash account debit, cash account debited, and recognize the rent income credited by 100,000. So this is a received amount in cash. Under the additional information, you can see at the end of the period, here the business recognized rent income receivable amount to, that is 20,000. Here is a received amount, here is a receivable amount. Now, let's, my dear children, discuss how to make adjustments to the financial statements when there are income receivables. Uday, again, I'm telling you, when we calculate profit on accrual basis, to calculate the accurate profit, need to recognize the total income relevant for the period, whether received or not. So received amount is 100,000. So you know rent income as other source of income. What is the main source of income, girls and boys? It's sales, right? So here is a received amount. It's available in the trial balance, 100,000. Right? When you prepare PNL, my dear children, no need to mention 100,000 plus blah blah blah, right? Directly record the correct amount. So I'm teaching right now, right? Okay, so here's the received amount of rent income. Under the additional information, you can see part of rent income of the same year as receivables. So how do we calculate the total income then? Received amount plus receivable amount. So how much is the total income, my dear? So it is 120,000. It is 120,000. It is 120,000. Now question, that means I recognize this 20,000, which is the income receivable, also as an income. This is also part of income, an increasing income credit. So as a debit entry. Okay, Bude? We need to consider the rent income receivable amount also as a part of income. Now, this is also part of income. Part of income has not received. Here's a received amount. Here's a receivable portion. Right. Now, dear children, so to find out the total income to the paid amount, to the received amount of rent income, you need to add the receivable amount. Here it's ready now. Out of the total question, how much has received? Only 100,000 has received. So what can you see now? On the other hand, you can see a receivable amount. What are receivables? Assets. What are receivables? Cash also an asset. Receivable amount of cash also you need to recognize as assets. So you need to recognize here as an asset. Now, out of the total 100,000 has received, 20,000 is yet to receive. Until you receive it, you need to recognize it as an asset. What kind of asset? It is a current asset, not like land and building, furniture, machinery, right? Right? So this is not a non-current asset. You need to recognize this as a current asset. As what, my dear? Rent income rent income receivables. Rent income receivables. You know receivables as assets. Dear children, then what I did? Here this 20,000 considered as an income. The same 20,000 considered as an asset. So what's the double entry for income receivables? Income receivable account debit. Income receivable account debit. Income account credit. Okay, now my dear children, let's try another activity, and I think this is clear for all of you, right? Okay, dear children, let's try another one, right? Now you can see 10% investment in the trial balance. 10% investment. What are investments? Investments are also assets. Cash is an asset. Receivable amount of cash, debtors are assets, income receivables are assets. Bank balance also asset. So our investments also are assets. You can see three characteristics, my dear children, of assets here also. right? You can see three characteristics relevant to assets when it comes to investments also. Dear children, 10% investment, 100,000. And in the same trial balance, you can see the return on the investment. We invest by expecting a return. So here you can see investment income as 6,000. What is this 6,000? You all know. This is a received investment income. This is a received investment income, dear children. Now you can't see anything under additional information. No need to provide. Why? By using this 10%, either I taught you in the class, by using directly this 10%, we can calculate the total investment income. So we invest, dear children, by expecting a return. We invest additional by expecting a return. So how much is the return? The rate has given 10%. You can calculate the total investment income easily. So total investment income we need to record under other income, dear children, as investment income. Investment income, right? Dear children, how much is the total? 100,000 into 10% is 10,000 is the total. So directly I calculated the other income as 10,000. Pute, now how much can you see in the trial balance as a received amount? There you can see only 6,000. Total income is say 10,000 while received only 6,000 means how much is the income receivable amount? It is 4,000. So until you receive it, you need to recognize that amount as investment income. Investment income, what my dear? Investment income receivables. Investment income receivables 4,000. So dear children, this is how we need to adjust this in financial statements. And remember, investments you need to record under non-current assets. You have to record investments under non-current assets. So when you notice investments, so these are long-term investments. So you should record it under non-current assets first. After recording the assets that we depreciate, after recording physical assets, we have to record this as a financial asset under the same category of non-current. Then you can calculate the interest as 10,000, the total interest, then compare it with the received amount, received only 6,000, then you can recognize a receivable amount, right? So very important, you must record this investment under non-current assets in the SOFP. So right now I didn't present it because I want to present the income receivable adjustment. So this is a non-current asset, you need to record it under non-current assets, right? I think it's clear for all.